9 o'clock. And I want to be respectful of everyone's time. I'm sure other people will be joining us, but I do want to be respectful of everyone's time this morning. I thank all of you for joining us this morning, for giving us a couple of hours of your time. My name is Deborah Davis. I am the Regional Director of Minority Business Assistance Center at the African American Chamber of Commerce. Joining me today is Mr. Ed Mathis. He is the Vice President of Republic Commercial Real Estate. I want to make sure I got that right. Vice President of Republic Commercial Real Estate. And he is going to be our presenter. He's going to talk about leasing versus buying equipment and business locations. So I'm going to turn this over to Ed Mathis right now, and he's going to give you a little bit more about his background, and then he will proceed with the presentation. If you have any questions, please make sure you use the chat, or you can use the question and answer box as well. Please make sure you engage. This is your opportunity to learn as much as you possibly can. So please ask questions, engage, and participate. That's the only way you're going to get as much out of this as you possibly can. So without further ado, I'm going to turn this over to Ed. Ed, thank you so much for joining us today and for giving us your time. Thank you.
Oh, thank you, Ms. Deborah. I appreciate it. So hello, everyone. My name is Ed Mathis. As you said, I'm with Republic Commercial Real Estate. I've been in commercial real estate for about 6 years now. And I started not knowing anything about commercial real estate. All I know is I wanted to purchase a high-rise downtown Cincinnati, and my mentor thought that I was crazy because I knew nothing about it. And he told me, if you want to know about commercial real estate, you need to get into the field. And once you get into it, you understand it, then maybe once if you still want to buy commercial real estate, then I may help you out. So that's all the incentive I need to get into it. I interviewed with almost every brokerage in town, and they all told me, short story, no. They said, I don't have the family lineage. I don't have whatever reasons, whatever. They told me no. And I had one group, Republic, that said yes. They said, hey, if you're willing to work and you're willing to build your own client base, I will give you a shot. So they gave me a shot 6 years ago, and I'm still here, and I'm able to help a lot of local entrepreneurs find spaces that typically usually don't get the shot to get in these spaces. I'm able to help them. One of my dear clients and dear friends that you may know is Davis Cookie Collection. They're over in Bond Hill in the business district there. We started working on that place when it was still like abandoned, and the Port Authority hadn't worked on it at all. And we went through the whole process of getting equipment, building it out, finding loans. We did everything with that process, and I learned a lot. They learned a lot, and to this day we're still friends. And we work on a lot of stuff together. So, but shortly, if you have any questions about commercial real estate, anything like that, please put it in the chat as we go through this, and I would love to answer it. And then after, if you want to talk offline, just kind of answering your questions, I'd love to do that as well. So I'm gonna try to. Do I have the reins, Ms. Deborah?
You should be able to share your screen.
Okay, I'm gonna go in here now. Okay. Okay, can you see my screen there?
Yes, it's full screen. Thank you.
Okay, perfect. So as Ms. Deborah said, again, we're going to be talking about leasing versus buying, and that's with equipment and in commercial, and buying your first, or second location for your business. So, we'll get going here, and we'll start. So the agenda will work this way. So we'll talk first about favorable and unfavorable factors when it let me move this over here. So when considering leasing equipment, and then we'll talk about selecting your business location, and then thirdly we'll talk about lease and purchase types. Lease and purchase types, because there's a lot of them, And I realize people don't know a lot of the different ways to acquire this real estate. They think it's only one way, the way that the landlord tells you that he wants you to, and that's not typically the right the way that you may want to do it. You may want to go a different way about it that benefits you best for your business. So let's dive in. So factors favoring the leasing equipment. So leasing is a good thing. Especially if you're just getting going, and you don't have a ton of cash to put up front, and you're still working on loans or you're still working on different things. Leasing is a good option, especially if you need that equipment to to run your warehouse or to run your facility. You can always reach out to these leasing companies, and they'll give you a smaller amount up front. You can maybe put up 1 or 2 months of payment, and they'll be able to give you some equipment to get going. And it's a good thing. Now it's a flip side to that, and I'll talk about that later. But just getting going, you don't have to put a lot of cash up front. Zero down payment, which is always good, especially when you're just getting going. Um, your lease charges are spread over a longer period of time, and it's a flip side to that, as I said. And then individual payments are usually lower than service on debt. So what I realized when I reached out to some of these leasing companies, especially for some of my clients, when we were going through some of the process to get some of this equipment, it is lower. Um, and these guys, you got to realize they're salesmen. They're trying to figure out ways to make their quotas and their commissions. So they're willing to will and deal a little bit more than if you went to the bank. The bank is just pretty much straightforward. Fill out this application, get the loan. This is what we're using the loan for. But with these leasing companies, they're willing to will and deal a little bit because they have to feed their families and make their commissions. So you might get a little bit more leniency going that way. Restrictions placed on company finances are usually fewer than with the bank. And just kind of what I was saying, these leasing companies, they might charge a higher rate, interest rate, but they're a little bit more lenient when it comes to how much money you have, your operating finances and stuff. They're a little bit more lenient when it comes to things like that. Lease payments are deductible and expensive. I would just reach out to my the person who prepares my taxes on this. Any questions when it comes to taxes, I always refer you to your CPA, because it's just my CPA. He always tells me, don't tell people how to do my job because things change so much, and I end up telling you something that's outdated. But I always just say keep a good relationship with your CPA, talk with him or her, and figure out what's the best route for your particular business. Leasing firms are often better buyers of the equipment. Now, this is absolutely true. If you just get the loan and you say if you're making I don't know, widgets, and you needed a particular piece of equipment to make that to make that widget, I would I would definitely lean towards having a relationship with that leasing company because they know their equipment in and out. They know exactly what you need to do to fix it. They know exactly where you can. They know how to send you more product to fix that problem. But if you just buy it outright and you don't know anything about that particular piece of equipment, and you're just kind of going at it, you could possibly waste your money. So if you got that leasing company, they especially if they're leasing it to you, they're like, hey, let's try to keep this thing running because we want to continue to collect the rent, collect the payments, and we want to keep that machine in your location working for as long as possible. So they do know a lot about their equipment and they'll keep it running. Um, when the lease equipment operate ownership remains with the leaseor. Consequently, the risk of obsolescence lies with the leaseor, not you. So, which is true. So if it breaks down, if the if its technology becomes null and void, they have to worry about keeping that thing up to date. So I like leasing. If you're okay with the, the flip side of it, but um, leasing lays on. I like to lay the risk on someone else as much as possible, and leasing this equipment definitely lays the risk on that the leaseor. Um, like as I said earlier, leasers frequently are willing to take the credit risk, take more of a credit risk than a bank, and their operating leases are not as not a liability on your balance sheet. So, like I said, reach out to your CPA, talk to them about that, and make sure that what you do buy, you're able to put that stuff on your or mark it down on your taxes for depreciation and different things like that. Leasing is now factors that unfavorable is leasing frequently is more expensive because you're going a longer period of time. With, of course, as you know, one payment you're done over, 5 or 6 years of payments is you're definitely gonna spend a little bit more money in the long run. But that's something you got to weigh and see if that makes sense for your business. If it works for you, I say do it. I got a couple of guys that I know that run manufacturing plants, and they lease a lot of equipment in there because it just makes sense for them to be able to have that relationship with that leasing company, that if any of that equipment breaks, they're able to tell them to send them some new product and fix this problem. So it makes sense for them, and they're bringing in enough cash from the sales or whatever they're making to be able to furnish that lease. So it's just a case by case basis. And as you're sitting down making your business plan, or you're sitting down talking with your business advisors, or I would definitely weigh that option. Um, if you buy, you can deduct on for tax purposes both depreciation and interest. Like I said, reach out to your CPA, but definitely you can do this. But I would just say, to the extent, reach out to your CPA to find out exactly how much for that particular unit that you're looking at. If you lease, since you do not own the equipment, any salvage value reverts to the leaseor at the end. Yeah, if you're leasing, and you let's just say you lease it and you're supposed to do a 5-year lease, you do your 5 years and you decide, hey, I don't want to buy, because most of these lease contracts have a purchase inside of them at the end. So after your 5 years, the company will ask you, hey, do you want to just buy it for X amount of dollars, which is usually a discounted from what it was new. And if you don't, most of these leasing companies are like, similar to like car places. If you don't, once you bring it back, they'll fix it a little bit, and then they'll try to lease it out to somebody else to get the rest of the life out of the machine. So they kind of win in that instance if you don't want to buy it. But I mean, to me, once I let it go and sell it or give it back, I'm pretty much not thinking about what life is left in there, because I got what I needed out of it. Um, Interest rates, are usually higher than what the bank charges. This is true because they're taking a little bit more of a risk. Banks are gonna be a little bit harder to, to get these type of loans, or to get this equipment, get loans for the equipment. They're a little bit more of a, more sticklers to things. But with these guys, like I said, they're salesmen. They're trying to make sales, so they're willing to go a little bit lower on the credit, and just to make sure that you're able to get into the, get the product and be able to use it, because they're trying to make sales. Um, if you don't look closely track the dates specified, some leases, there is a risk of incurring significant additional charges. This is true. So if you got a 5-year lease, and you don't pay attention on that 5 year, on that 5th year, when your lease goes out, if you don't reach out to them and say, hey, I want to renew, or hey, I want this to end, can you have your people come pick the machine up? Next thing you know, they'll most of the time they'll either roll you into a new lease of the same value that you had, or either they'll start tacking on extra charges for you to go month to month with them. So if you were paying $500 a month, they'll tack another charge on top, and it'll be $700 a month because they're saying it's higher for them to go month to month because the revenue is not guaranteed. So they'll charge you a higher risk, and you'll see this in leases. You'll see this in leases for real estate as well. They do this. It's a higher charge to go month to month sometimes. Leased equipment cannot be used as collateral, and this is true, but I would definitely reach out to your CPA and talk with them about that. But it is true. You cannot use it as collateral. Um, Leased equipment usually cannot be re-engineered, rebuilt, or altered to meet the particular production needs of the lease. It must be kept standard. That's true. If you alter, say, if you have a machine that's working with some type of technology, and that technology is not it's not good for you anymore, you need to update it, or you need to add a piece to your machine to make it to make it faster or make it more usable. So most of the time that voids out your lease, and you're in breach of your lease, and they'll come and they'll give you all kinds of charges, or they'll make you pay for the machine as if it was new, or if you broke the machine, which you didn't. You made it better for your use. But when you lease, they don't want you altering their machines at all, because they're looking at down the road. They might have a little bit of life left, and they might want to sell it to someone else or lease it to someone else. And if you altered it, it makes it hard for them to do that. So just to kind of sum it up, when you're looking over and you're talking to your business advisor, or you're going over your business plan, these are some of the questions you may want to ask yourself when you're working through that. So when you're talking about cost, when is the required down payment for the lease or the loan? Because that's a big deal. You want to make sure that that you're able to cover that, or how soon do I have to pay that? Are they giving me any kind of lead time? Because sometimes the leasing companies will tell you, hey, we'll give you 3 months free, and then you'll start paying on that fourth month, when banks are like, hey, once we give you the loan and you get the equipment, you start paying 30 days. So you might need that extra month or two to be able to get finances in order, or get some kind of cash flow going. So you might need that time. What is the monthly payment for the lease versus the loan? As I was saying earlier, your lease payment is probably going to be I'm not going to say in every aspect, but lease payments are usually a little bit higher than a loan payment, because they're taking a little bit more risk. So they're going to charge you a little bit more. The interest rate might be a little bit more. And loans from the bank, it might be a little bit more favorable, but they might be harder to get for some people. So, that's all something you have to weigh. Cash availability. Is there a significant cash flow to handle the monthly lease or loan payments? Um, I'm going to talk about this later on, but this can go with real estate and for this. You want to make sure that if you take a loan out on any of this, or a lease, you want to make sure you got a clientele base that's buying your product, or you have someone to sell it to that's generating enough cash to be able to not only cover the loan payment, but you got to cover everything else you need to operate. So all of that needs to be looked at before you decide to make a decision. Um, it's something that you definitely need to pay attention to and watch, and make sure that you're budgeting for, because if you don't, you can end up in a world of trouble with late fees and charges and all kinds of stuff that you don't want to have. What are the maintenance costs associated with the item? This is big. With leasing, like I said earlier, with that leasing company, if you need some kind of maintenance, most of the time inside the contract, they'll have some kind of a maintenance type of a deal with it, that you can send it back, or they'll send a guy out to work on it. If you need to have maintenance done to it, but if you buy it right out, you need to know what what are the maintenance costs, because if that machine breaks and it's $5,000 to fix it and you weren't anticipating that cost, next thing you know, you got a machine sitting there that's not generating any kind of revenue for you. Tax benefits, can this item be depreciated for tax purposes in the lease or the loan? And what is the amount of other tax benefits associated with this item? This is good questions to ask for your CPA, because ask to your CPA, because they'll be able to break this down. I know my CPA, he jumps on me if I buys anything and not run it past him first when it comes to the business, because he wants to make sure that I'm getting the best, bang for the buck on the tax side and for my, my business side. Obsolescence. So what is the operable life of this item? This is big, and this is big when it comes to, especially in the world that we're in right now. Technology is ruling everything, but technology on the flip side is moving so fast that once you once you think you got something, it's gone. It's not usable anymore. It becomes old so fast. So you want to make sure that if you buy something or lease it, that piece of technology or that piece of machinery will be able to last you for a long period of time. It's not going to be something that's, you buy it today and then all of a sudden tomorrow it's not any good for your business, and you didn't get a lot of bang for the buck. Would an item be replaced due to technological advance? Like I said, this stuff moves fast, and it's not as fast when you come to like a warehouse or people are doing manufacturing. They can buy a piece of machinery and they know that some of the things may need to be switched out, but they know their core pieces of machinery will last them for the next 10 years, as long as they keep them up and keep them running and keep them fixed. But when it comes to technology, if you can find some kind of a program or find a leasing program that can switch that technology out every 2 or 3 years, when things become, when that becomes obsolete, definitely try to look into that and see if you can find something that that will help you on that aspect. So before I move into real estate, did anybody have any like questions that I can answer when it comes to equipment, or try to answer for you?
I don't see any questions and I don't see anything in the chat. So looks
Okay.
like you're.
Okay, awesome. So I'll keep going along. So this is
So I guess,
moving.
Ed, I have a question for you.
Yeah, absolutely.
Okay, can you give an example of a client you may have worked with that you took through this process, and how successful were they in acquiring equipment, or what were some of the obstacles that they had to go through? Because you mentioned some of the obstacles earlier, that as far as if they went to the bank, a lot of them may have been qualified, but they weren't able to get the loan, versus going to a leasing company where it was a lot easier to get to lease equipment versus buying. Do you have any personal experiences you can share that how you helped clients through this process?
Yeah, absolutely. So I was I'll use, for instance, I was working with Miami Orthopedic Sports Medicine, and they were moving their facility from Kentucky to Ohio. And this guy, he was an independent a physician that was working there, and he separated from the company, so he had the name, but he was still operating as an independent. So he needed to buy a lot of equipment to run his practice, and build out his space. So he needed sinks, he needed tables, he needed equipment for the different things he would be doing inside the practice with the athletes. And when he went to the bank, he thought that the name would help him, because they got other branches in Kentucky, and the bank looked at him personally, and he was a minority, and they looked at him personally and looked at his finances and looked at everything on him personally. And he told them, hey, look at the business and look at what we have done. And they looked at him personally in his finances and his structures, and they were like, hey, um, one, you're not really asking for enough money for us to be kind of interested in it. And then two, uh, it, the restrictions that they had were, I would just say, they were higher than what he could do. So we had to find different avenues. So we found different organizations in Cincinnati to get him, smaller loans. And then we also went to a few of these places that lease equipment, and they leased him some medical equipment. And I had a friend, her name is Kay, and she leases medical equipment, and he went to her, and they were able to work out a lease and able to get the equipment that he needed, and it was like a 6-year lease. And I don't know exactly the numbers. I can't remember the exact numbers of how much he was paying, but he ended up doing it. It was a little bit higher than what he wanted to pay, but he had to do it to be able to open his practice. And we used the loans that we found in the city that I had connections to help him build out the space. And then we used Kay and her company to get him the equipment to fill in the inside. So he's up and he's still running. And I think over the time as the lease gave out, because this was about 6 years ago, so I spoke with him about 2 or 3 months ago, and he's in the process of buying his own equipment now because he's in a position to do so. So he's kind of buying his own and phasing out the lease equipment as it comes due. So it worked out for him. I'm not gonna say it works out for everybody, but it worked out for him, and it was a good thing for him. So we'll get going in selecting the business location. So before we get going, I wanted to just kind of break down, because I don't know everyone on the call is really familiar with commercial real estate and how it works, and that it is different classes to it. So with commercial real estate, we usually weigh the classes in A, B, and C. Um, there are other ones like abandoned buildings and properties that haven't been touched since the 60s and the 70s. They can be in the D and the F, but we don't really judge those when commercial real estate. We say A, B, and C. So your A properties are the newest and the best. So think of the stuff that they're putting downtown and in the business district, those tall glass buildings that have reception as soon as you walk in, and they have the coffee, the Starbucks on the inside and all that stuff. Those are A buildings because they come with a lot of amenities and they're brand new, and everybody, you see the P&Gs and all those want to be in those type of buildings. Class B properties are second generation space. And when I say second generation space, I mean you built it out originally and you stayed in there for 5 years, and then you moved on, and now I'm moving into the space. So it's not technically brand new, but it's good enough for us to be able to operate and do what we need to do. So it may not have in the instance, it may not have a reception at the front door or someone to take your packages. It may not have amenities in the property, but it's still a really nice property. And C properties are, let's just say you ride through maybe a good example is maybe Roselawn, in the like the Valley Shopping Center. Those properties where people are still there, there's still people still operating, doing good business, but the building may be on the other side of his youth. So it's like it may have been built in the 70s, and the landlords they're doing enough to keep it up, but they're not really doing anything over the top to it. So it's a little bit on the other side of youth, but it's still usable property. So in Cincinnati market alone, we got like 33 million square feet. So, and this is just pretty much A and B. We're not even talking about C, D. We're not talking about any of that. So this is just trying to give you a scope of what we got in the market. So it's a ton of space out here, is what I'm trying to convey. It's a ton of space, and it's just about what you need, how much space you need, and evaluating which space is best for you. So, and like I said, I don't know if you know about commercial real estate, so I just want to give a quick backdrop on what it is and how people use it. So, residential freeholding and condo, that's the stuff that you see people that they live in. This is what we, what this is the stuff we live in. So condos and residential houses, that's that stuff. Office buildings, everything from the African American Chamber, that's an office building, from the stuff P&G is in, Kroger Towers, that's all office space. The retail, it can be stuff from downtown or stuff like I said in Roseline, where people are running in those storefront type of spaces. Mixed use, you're starting to see a ton of this stuff hit the market, where you got apartments or condos above, and then you got commercial space storefronts downstairs. You do sometimes see office in it, but mainly in mixed use, you usually see retail. So you'll have apartments upstairs, and then they'll have a store downstairs or multiple stores downstairs. Storefronts with apartments, strip plazas, that's the stuff that, like you see in most neighborhoods, where it might be a pizza place in a space, and then it might have a dance studio or something like that. It's just those strip centers that you see in mostly every neighborhood. And then stores with apartments, you don't see this much as you used to. A lot. This used to be around all over the place. Like if you go through, you see it a lot in Price Hill. You'll see like a little small storefront. I remember where I used to live when I was a kid. I used to call them like the penny candy lady. She used to have like a store like this. Like it'd be like a little bitty store you walk in, and she'll have all your candy and all that stuff you can buy from her right there in that little bitty storefront. And then this apartment she usually or he usually lives in upstairs. And then industrial, this is like your Amazons, or your local manufacturer that's creating a product that they're shipping out, or they need to store product. That's what you see here. And this is like the hottest product type out right now. So I get a ton of people calling me, and they're like, hey, I need a warehouse for me to do this. And I'm like, it's hard to find warehouses. We might have to find something and kind of convert it, because warehouse space is like super hard to find right now. And power centers are like your malls and different stuff. Those places are kind of becoming obsolete, but they are still around.
So Ed, it's
Yeah,
Deborah. I have a question for you.
yeah.
You talked about converting space. How do you go about doing that? I know one of my clients had some space out in Eastgate that he was leasing, and it wasn't, when he walked in, it wasn't what he was looking for, but
Mhm.
he was able to convert it. He was able to get some kind, and I don't remember what the terminology is when you walk into a real estate location or office space, and you then convert it to what it is you need. Is there like loans, or does the leaser able to give you some kind of incentive for converting that space? I'm not sure if you understand what I'm
No. I
asking.
understand. Yeah, yeah, yeah. So that's called a change of use. So
Okay.
if you go into, like, say if you see this a lot with guys right now changing uh office buildings into apartment buildings
Mhm.
because their office is not being used. So they'll go to the city. You'll go to somebody like Eric, and you'll talk to him, and you'll say, hey, I got this property that's let's just say a retail space, and it used to be a cell phone store, but it has on the back of the cell phone store, it has a ton, it's got like a makeshift warehouse on the back of it where they used to store all the cell phones. Am I able to turn this into a manufacturing place? Can I change the use? And most of the time, if you present a good enough case, that city official, depending on what the rest of the tenants are, they might say, hey, look, go ahead and use it for your manufacturing plant. That's fine. We'll give you, it might be I forget the number or whatever, what it is, but they might say, hey, look, we'll let you use it for manufacturing, as long as you sell the products that you're making inside of it, so that we can say that it's more of a flex space or retail space. And flex space is pretty much retail in the front and warehouse in the back. So they'll give you a lenient, they'll give you a pass and give you the change of use to be able to do it. Or they might not even say it's a change of use. They'll just say, go ahead and we'll give you a permit and a zoning permit or zoning approval, and go ahead and just start operating your business or whatever you're trying to do in there. You usually see change of uses when you're completely changing the inside of something to something else.
Now, is there some type of financial incentive to do that? Is there something like with the person that owns that property? Can they give you some kind of incentive? Let's say the property's been sitting there for a long time, nobody's using it.
Yeah.
Is there an incentive for then me to come in and say, I want the space, but I need to change it? What kind of discounts or incentives can you give me for leasing the space from you and being able to change it?
Yeah,
For
absolutely.
my
So yeah, so when you get in, what that's called is TIs, tenant allowances.
Okay.
You can go in and you can say, hey, look, I love the space, but I can't use it the way that it's been used, or the way that the old tenant used this thing 10 years ago. So, and it's obviously no one else can use it this way because it's still sitting like this. But hey, if you would give me some tenant allowance, which is usually say, uh they charge tenant allowances by the square foot. So so if you have 1,000 square feet, you'll say, hey, look, I want to turn this 1,000 square feet from my office to a bakery. It's going to take me $40,000 to do it. Are you willing to contribute to that? So the landlord will come back and say, hey, look, I'll give you $5 a square foot towards your tenant build out. It's not going to cover the whole thing, but it'll cover a nice portion of it just to get you rolling. And then the landlord usually gets with the contractor and they'll pay it out as it goes. But that money is yours. But one thing I will say be leery of is because some landlords, uh, they're in business, so they get greedy. So they'll tell you, hey, look, we'll give you a tenant allowance to help you build it out. But then next thing you know, your rent went from $1,000 a month up to $2,000 a month because they're trying to figure out a way to get that money back and some. So make sure that you pay close attention to how they break that down and give to break down that tenant allowance and how they're looking to get it back. I would just ask them directly, do I have to pay this money back, and show me that I don't have to pay this money back, or show me how you want me to pay this money back. Because they sometimes they won't tell you, and then they'll just sneak it in on the lease or sneak it in some kind of way, and then next thing you know, you're paying a exorbitant amount of money.
So if they sneak it in, and then there's a question as well. If they sneak it in, what are some of the ways that they can sneak it into the lease that people should be aware of?
Yeah, so I've seen them sneak it in the obvious way. They'll tack it onto the rent, and so you'll go from paying $5 a square foot up to $10 a square foot, and then they'll say, they'll just tell you flat out, hey, look, it's because we're trying to get our build out money back. But then you'll see it in other ways where they're like, we'll use my people to build it out, and then they'll inflate those numbers because that's their contractor, and that contractor give them kickbacks because they want to continue to work with that landlord. Or they'll tack it on, which is huge. They'll tack it on with the HVACs, and they'll tack it on with the plumbing stuff that you absolutely need, but they know that it's high dollar amounts. So they'll just tack that money into that and say, hey, look, we'll fix it and we'll give it to you new, but they'll tack that money in there. And then next thing you know, you're paying for it because you're like, hey, I need AC, or I'm not going to be able to operate in here. So then you'll pay HVAC and commercial, and residential is about 10,000 or so. And commercial is like 30, 40, 50,000 for a unit. So they'll tack a little extra on there, that extra $5,000, they'll throw it in there, and you're not paying attention to it because you're like, this thing costs a lot anyways, and you're just paying it, and then they're able to get their money back.
And so Karen Jones has a question,
Mhm.
and she wants to know, is that the same for childcare or church? So can you do a build out with a like, I guess Karen is asking if you have a church and you want to convert it from a church to a childcare
Mhm.
center, can you do the same thing with that? Because is that a different type of business? You know, it's a different structure. I don't know how that
No,
works.
no, yeah, no, it's absolutely the same. It's the same process, but I don't even think that what you may not need to go in and get a change. Well, you you will need to get a change of use, but it's not as strenuous as a developer trying to change a whole building. It's pretty much you going down and getting an application, or going online and getting an application. First, you want to start off with a conversation. Call them and tell them what you're trying to do at that property, and say, "Hey, look, it's a church, but I want to turn it into a daycare.
And who
Is
should
this?"
they be? I'm sorry to interrupt, but who
Yeah,
should
yeah,
they
no,
be
no.
calling?
So
And when you say
yeah,
go online, where should they go? How
yeah.
should they
So
do
if
that?
you want to go to it's Cincinnati, uh, Cincinnati, like .org or .gov, I think it is. But you want to go to the zoning department, and I can look it up before we get off the call today and get the exact address. But you want to go to the zoning online. It's a zoning department, and then they even kind of made it a little bit better where you could type in the address and it'll tell you kind of what it is. But what I do realize about that is that it doesn't go into detail as far as if you're okay with changing that. You got to talk to one of the guys down there or the girls down there, and you got to ask them, "Hey, I have a daycare and I'm looking at this church space. Am I able to use this space for my daycare? Not can I change this or that? Just ask them a direct question. Am I able to use this for my daycare?" And they'll tell you, most of these guys will tell you, and they might even thank you. Because I get it a ton of times. They'll just thank me and say, "Hey, thanks for calling us first, because it's a headache for us to have to come out there and find out later that you did it, and then we have to shut it down or make you pay all these fines." Call them first and just ask them. Call the zoning department. It was a guy down there. His name was Bill, and it's some other people too. But call down and just speak to the zoning department, because that's who handles whether it's a high rise downtown or whether it's a small storefront in Roselawn. That zoning department is the one that gives everyone the okay to open up and do business in Cincinnati in a commercial space. So you want to call and talk to zoning and just ask them a direct question of, "Hey, I have a cell phone store I'm looking to open up in this space. Am I allowed to do that?" And they'll tell you, "Hey, what is the address?" And then you'll tell them, and then they'll say, "Okay, you're allowed to do that," or "No, do not do that. You'll be able to do it here, but not here." So they'll tell you, and because they want to save themselves a headache, so they'll tell you directly and right away.
And Mary Jane Good, she has a question. Should you
Yeah.
ask for a letter?
From the city.
I believe it's from the city.
Yeah,
Yes.
yeah. You can. I'm gonna be honest with you. Most of the time, they won't do it. They'll tell you verbally, and then. But if you ask for, I've asked for a letter a few times, and I got it maybe once. Other times they fight you on it, and they're like, "Look, just take our word," because they got so many calls, and they get like, I don't want to say they get annoyed fast, but they're like, "We gave you the word. We told you could do it," and move on. What I would do is get the name of that person and maybe document the day that you spoke with them, and make that person say, and just before you get off, say, "And are you absolutely sure I am able to open this?" And once he says yes or she says yes, document that day and say that I spoke to uh, James such and such this day, and he said this. So if that ever comes up, you're able to identify the day that they told you and the person you spoke to, and it's not fully, bulletproof, but it's able to give you at least a little bit of something to fight with if they ever came to you and say, "Hey, look, shut this place down." But
So
when it comes to daycares, or well, churches, they need to reach out to the city anyways, because you're tax exempt. So the city has to wipe everything clean. So for you don't have to pay taxes on it. So you got to reach out to them anyways.
So is it best, I mean, because I know in this day and age, people are concerned because you could say yes today and then somebody else comes in and takes over the job and they don't know anything about it. So I guess they're looking at how do they document they had this conversation. I know you said to make a note of it, but is it good, like if you have that person's email address, you send them an email, thank you for talking with me today,
Yeah.
for our conversation, blah, blah, blah. And, just so you have that documentation, timestamp, dated, and everything else.
Yeah, definitely. I would push for them to give you a letter or email or something to confirm it. And some of them will. It's just that you'll run across a few of them that just will give you a hard time about doing anything outside of them looking on the computer and verbally saying it. But I definitely would push for it. I push for it every time, but I'm just being honest with you. I don't get it every time, but I push for it every time. But
Okay.
definitely, if you can try to get some kind of verbal or some kind of confirmation, that way you can have that and put it in your file. Definitely try to go for it. Yeah, absolutely.
And then Karen wants to know if they could get your contact information to ask for more specific questions, I guess, within the zoning department.
Oh yeah, absolutely. I'm gonna give. I got a slide at the end that has all my information. But yeah, I'll definitely you'll be able to call and yeah and talk to me and I can help you out however I need to.
Okay, so I'm going to let you proceed.
No, and ask as many a question. This is where I'm best at just kind of kind of throwing questions back and forth. So that's good.
That's your comfort zone. Okay.
Exactly.
Okay.
All right. So just kind of giving you a scope of some of the things you have to look at when you're going into a property, whether you leasing or buying. It's property taxes, insurance, utilities, mortgage. Um, Now I know it sounds crazy to say that you have to look at these things if you're leasing, but you do because most of these places, especially in a retail environment, or if you're in a property where you're the only tenant in the property, let's just say the daycare, for instance, a lot of times the daycare takes over the whole building, or a church takes over the whole building. So what the landlord likes to do on those type of things are triple net leases, which I'll get to a little bit later and explain it more in detail. But triple net leases means you cover all of these things and you cover your own charges as well, whatever you accrue for your business. So, if you're not comfortable with triple net or comfortable with paying, I get a lot of tenants or a lot of clients that'll come to me and say, "Hey, look, I'm not trying to be paying a landlord's property taxes, insurance. That's not my building. I'm not doing that." But he looking at it as in a business sense from his property. He's like, I'm turning over my entire property to you. And I can't generate any other revenue from this property. So if you're operating and you took the whole building, you need to operate it as if it is your building. And I know a lot of people don't like it, but that's kind of a common practice here in commercial real estate. So this kind of touches on some of the things we were just talking about, some of the stuff that you want to, especially with the zoning department. But this is some questions that, and I say they must ask questions before you move in or purchase any property. Do the zoning permit your type of business? This is huge. People don't do it enough. They do not call the zoning department and ask them if their business can go in there. And people, when I tell clients this, I say, look, first thing we got to do is call and make sure that your business can, once we find a property that you like, we got to call and find out if you can go in these properties before we even go look at them. Let's see if you can go, see if your business can go in there. And the people get mad and they go off on their own and do it. And then next thing I know, 2 months later, they're open and they're running in that place. And then 5 months later, I see a sticker on the door saying that they can't operate there anymore because the city said that that particular property was earmarked for this and not that. So will building codes permit the plans of the renovation? This another you what you realize from the city of Cincinnati, and this is any municipality, they love permits because they love money coming into the place. So they got permits for everything. So they got a permit if you want to move in there. That's your zoning. You want to move in. They got a permit for if you want to build it out. They got permits for everything. So I would just check in, make sure that if you want to build it out, say from like you said, a church into a daycare, you need to have your plans drawn up, and then you have to submit them to the city zoning department, and you have to say, hey, look, I'm looking to change this property into this. This is the inside of the building. I want to build it out and make it look like for my daycare. And then they'll tell you, okay, change this, move this wall, do this, and then give us $200, and then go ahead and you can go ahead and build it out.
So, Ed, it's Deborah again. So
Yeah.
permits, each permit, there is a cost associated, or is there just one lump fee that you have to pay for permits?
Oh no, they want fees for each one. Each permit.
What's the average cost for a permit?
So it ranges. So I would say it starts at about $100.
Okay.
And then it goes up. I've seen some permits $500. It just depends on how big the project is and how much work the city has to do to evaluate it. But yeah, it starts at about $100 a permit.
So you get the permit, and then the city comes in to evaluate, sort of like does an inspection of what you want to happen with the space and what can actually happen in the space.
Yeah, so they don't right away, they don't come in. So you'll go down and you'll say, hey, look, you'll go online and you'll fill out the permit application. You'll have to get with an architect maybe and have them draw your plan out to fit the space, what you ideally want. And then you take that whole package and then you submit that to the city with your fee, $100, $200. You submit it, and then they at the office they evaluate it, and they say per code you have to have a door here, or per code you have to. They fix the drawings to
right. Okay.
to work with the city, and then they send them back to you. And then once you have your person, once you say, okay, I can deal with that, you have them build it out, your contractor build it out. And then throughout that process of building it out, the city will have people coming out periodically through process. So they'll be like, after the plumbing's in, they'll send a person out to check the plumbing. After electric is in, you'll have someone come out. After the walls are up and it's in, they call it white box when they have just the drywall up. Once it's in white box stage, they'll have someone else come out to make sure that the drawings look exactly like you told them to. And then once you get the bathrooms and all that other stuff in, before you move furniture in, they do like a final inspection. They come out and they say, okay, this is exactly what you sent us in drawings. This is perfect. They give you the stamp of approval. And then you're able to start moving in your furniture, painting, and doing all that stuff that you want to do.
And how long is this process usually?
It depends. I would say for a regular retail store, let's just say a boutique or clothing store, they don't really have a lot of like equipment moving in. They're just kind of, fixing up a space and making it work. So I would say maybe 30 days to 60 days. Now, if you're talking about something like Davis Cookie, a bakery, where they're taking a space that was not like that and transforming it into a bakery, and they have to get hoods and all this different stuff watered down, it took them, I don't know, it took them maybe 6 to 7 months of going back and forth and approvals. And then I think even when they got to the 7th month, it was an extra month or two because some things needed to be tweaked even further. So it can really get stretched out. So what I tell people when I negotiate their leases is that I try to shoot for, like, depending on what the business is, but I try to shoot for free rent months. So I go and I tell them, like, hey, look, you're opening up a retail store, but I know you need approvals. I know you need to get your clothing and all this stuff set up and get your marketing out. So let's ask for 3 months free rent. And then that'll give you 3 months of just revving everything up, getting approvals, getting your marketing. But if you open up like a let's just say a kitchen or some kind of restaurant, I'll ask the landlord for 6 months. Now you might go past that 6 months, but at least you didn't have to pay rent for that 6-month period, and you're able to save that money or use that money to do what you need to do.
Okay.
Now they might come back and say, okay, we'll give you the rent for free, but you still need to pay utilities and all that other stuff along with it, which is fine because it's a lesser charge. but we try to go for absolute free for 6 months or whatever it is. I try to go
So
for
during
absolute free.
that free rental period, you're base, that's the time that you're building out, you're getting your, like you
Yeah.
said, your marketing, your merchandise or whatever. So that's your build out time. And then during that time period, you want to make sure that you're not having to pay rent on top of paying for construction and everything else.
Yep, that's
Okay.
absolutely right. That's your time to be solely focused on build out marketing and getting approvals from the city.
Okay.
And then setting up your place and getting it ready for business. You want to try to work as hard as possible to get it done in that free month period, because it's hard to try to do that when you're, say if a permit comes back and they say, look, we need you to change this wall or fix this, and that's going to be an extra 2 weeks when your contract to get it done. You don't want to be worried about that and paying the rent on top of it, and you can't make any money because you can't open up yet. So you want to try to squeeze all that stuff into that free month period, and get it done as fast as possible, and quality work, but you want to get it done as fast as possible to see if you can. Hopefully, you can get it done faster, and you can get a couple free months, and you're operating business. You're
Right.
operating and you got it going.
Okay. All right. Thank you.
No problem. So let's see, restrictions are reviews. See, is the rent high or low related to the area market rate? This is a big one. I see this a lot when people go out and they go out and try to negotiate the lease, which you can. I want to say this here. You can negotiate your own leases if you want to, but it's best if you get with the way that I operate and the way the other brokers operate, because it's not just about me. Other brokers operate. We don't charge. I don't personally charge my client. So the work that I do for you, calling the city, reaching out to my contacts to get you loans, all that stuff is on the front end is free, and then I charge my fee to the landlord at the end of the transaction. So um people think that if I'm doing all of this stuff, I'm going to charge them right away. They got to worry about that fee. Don't. But I would recommend you contract some kind of person who do commercial exclusively every day, all day, because you'll get people who do residential and commercial. And not saying that they can't do it, but it's just two different things. And if you don't understand them both, if you don't understand the commercial what side, you'll get taken advantage of, if you don't understand it. So I would definitely recommend you work with a professional, and then you'll understand the market rates in the area. So people in the area may be paying $8 a square foot, but then landlords, they always want more for their property because in their eyes, their property is the best property in the area. So they're going to come out and say, we want $15 a square foot when everybody else is paying 8. And if you don't know that, and you see this space and you fall in love with it because he put up paint and floors, now you're paying $15 a square foot and think that you're having a good deal when really you're really getting taken advantage of. So you want to, before you go and fall in love with a property, call the other bro. You'll see their signs up. You can call them and say, hey, how much are you charging for this space? And they'll tell you $8 a square foot, $10 a square foot. And after you call a few of those places, you'll kind of get an idea of where the rent should be and if you're paying over and beyond where you should be at. Um, you are required to carry insurance on your part of the building. Are you? Most of the time you are. I'm just be honest with you. Landlords are going to ask you to take out some kind of liability insurance, and it can range. I've seen some range for, $40 a month to $100 and maybe even more. But yeah, they're going to ask you to take out some kind of liability renters insurance on your portion of the building. Um, is there plenty of parking? This is big. I mean, especially if you have clients that you're working on that needs to walk in, that need to park to be able to come in and eat or come in and shop the clothes, or are you looking for drive-by traffic? These are all things you want to take into account, because if you don't, you get in there, the space might be beautiful, but if you got a space where you count on people being able to park, but you found your a beautiful space downtown with no parking, and people are like, hey, I love your place and I want to come in, but I don't want to pay to have to park, or I don't want to pay and then have to walk all the way over there. So you want to make sure that the space fits your clientele, and make sure that it works for your business. Um, this is what I was talking about earlier when I was talking about TIs, tenant allowances. Um, ask them, how much are you willing to give me to build this space out? Every landlord in Cincinnati that has a commercial building understands what TIs is, and they're praying that you don't ask for it, but you're gonna ask for it. Ask for that TI money. And if you want to build it out, I mean, you might not want it. I mean, I can't speak for everybody. Some people don't want it. They like, hey, look, I don't want to ask them for money and have to pay it back, or I don't want to ask them for money and they think I owe them, or but I just feel like, throw it out there, ask them, hey, how much are you willing to give me TIs per square foot to build this space out? And
But
any
Ed,
uh-huh.
it's Deborah talking about the TIs, but is that good business sense though? If you have an opportunity to keep money in your pocket and
Absolutely.
invest in your business, wouldn't it be an incentive for you to ask for somebody else to pay out of their
Absolutely.
pocket versus you paying out? Especially since you're getting started, you're just a new business trying to get started. It's just an additional cost, but it's like you're leaving money on the table.
Absolutely. But you'll be surprised how many people don't want to do it. But I tell every client, like, let's, inside the LOI, which is a letter of intent, that I put together for people, and that's pretty much, it's non-legally binding, but it's pretty much me setting the terms that we're going to use to put inside the lease. This is for, we don't have to go back and forth in the lease and have attorneys racking up charges. Me and you and the landlord can write it down on this piece of paper, and then once we agree and sign on this, he can just transfer it over to a lease. Inside of every single one of them, I would say 99.9% of them, I put TI allowances. How much are you allocating for TI allowances? And some landlords might not want to give you money to build it out, so they'll say, hey, we'll give you 6 months free rent for the space instead of giving you actual dollars to build it out, because they might have a building, like I said, that's a C building that really hasn't been bringing in a lot of generating a lot of revenue, so they're not really sitting on a pile of cash. So they're like, we can't give you $30,000 to build it out, but we can give you free months because we haven't been getting any rent on it anyways.
Exactly.
Yeah, so we'll let you just have 6 or 7 months of free rent, and that's allocate. That's pretty much the equivalent of what you're asking for. So we'll just let it go. So you'll get that. So I would definitely, all the time, every time, ask for TIs, and then if they can't give you TIs, ask for more free rent. We're already asking for free rent. We want to ask for more free rent afterwards if they can't give you TI money. Who furnishes the heat, lighting, water, and repairs? I'm going to tell you, to me, and this is just from my standpoint dealing with my clients, and that's from, selling huge office buildings to leasing out 100 square foot office space. The HVAC is one of the most important things to negotiate when you're talking about commercial space, whether that's buying it or leasing it. You want to talk about the HVAC because of the cost of it. The cost of it is just is so expensive to fix, and landlords do not want to fix them. So they will come in, and you might ask them, hey, when was the last time the HVAC was changed? And they're like, oh yeah, it's good to go. And then you get in there and you haven't negotiated it, they will turn a blind eye and say, well, when you didn't negotiate it, that HVAC is yours. And then they won't fix it. And there's nothing you can do legally to have any kind of recourse on them. You have to either pay to fix it, or you have to go without HVAC, or keep coming back to them until hopefully you wear on their heart to be able to give you some money towards it. And that rarely happens. So I would say always negotiate your HVAC, your plumbing, and the electric. Those three things right there, we can work around everything else. But those three, especially the HVAC, is huge. You have to get that stuff negotiated and figured out early in the process, because especially on C buildings, or especially even on B buildings, the HVAC gets you. I think it's outside in the weather, it's getting ran down, it's been used all the time. So you got to get that stuff figured out. And me personally, I put caps on stuff. So even if it's new, the landlord to say, hey, look, we changed that thing 3 years ago. We've been keeping the maintenance on it. It's good to go. We don't really want to have to be responsible for it. Well, I'll tell them, like, look, my client is only responsible for up to X amount of dollars. So I usually cap it at about $1,000. So you got to think of, even at your home, if your HVAC's break, it's usually, to fix it is more than $1,000. So I usually cap it at 1,000. That's my way of being able to wiggle you out of it, so that the landlord, if anything happens to it, they have to fix it. And I think that's how it should be. If you own the building, you should be fixing that HVAC, unless I'm a place like a Walgreens and I'm leasing your space, and you have nothing to do with the property and I'm just wearing and tearing on it. That's a different thing. But if you're just a local tenant and you're leasing the space, there's no way you should be responsible for a $30,000 unit. That's just my personal opinion. And landlords probably think different, but that's the way that I think about it. Uh, do you have the right to sublet? This has became a hot topic right now, especially during the pandemic, because you're seeing a lot of people not using their space. They're especially downtown in those office towers. 90% of their workforce is sent home, so they're sitting on 2 or 3 floors of empty space. So, and even with you, say if you had a space and during the pandemic, your business took a bit of a dip, and you're like, hey, I'm taking this thing online. I don't want to be here at the store every day because it's not really generating revenue. A sublet gives you an option to be able to say, hey, you might know a friend or you might know someone else that really loves your space and doing good business. You might say, hey, look, hey, hey, Sarah, do you want to take over my lease? Like, you want to lease this? So that gives you an option. It gives you another lease to give to them. That way you can pull out of the space and you don't have that weight of paying the rent. So they'll take over the payments and they'll start paying. But you gotta specify that early in the lease process, because a lot of landlords don't like it because they don't get to vet the person that's going in, and they want to stick it to you because they already did their credit checks and all that stuff on you. So they're like, hey, if this thing falls through, I don't really know that other person. How can I get my money out of that, out of you, if you gave your lease to someone else? So you got to make sure that's okay with landlords. They're a little bit more open to this right now because of all the stuff that happened over the last year. All the big tenants and all these different places have been hammering on landlords about sublet. So make sure that you discuss that when you talk about leases.
So Ed, I just have a question about
Hmm.
subletting.
Yeah.
So let's say the contract is in my, or the lease is in my name, and
Mhm.
then due to COVID, I haven't been able to open my bakery or restaurant, whatever, to full capacity. So I'm looking at subletting. Is there a way that I can do a background check on the person that I'm subletting to just reassure me, to make sure that, I'm vetting them, and then like sort of reassure the landlord that they have been vetted? And then, so what, then do I go into a sublet contract with that individual to sublet from me? I mean, how do I hold them accountable? Because I don't want them to leave and then I'm left with having to pay the rent, or they come in and destroy the property. And then what type of position does that put me in if I've sublet it to them?
Yeah. So the way that a sublet works is you are the leaseholder. Mrs. Deborah LLC is the leaseholder. Then you'll have the bakery or whoever wanted to take over your space. They come along. I would advise you to do a background check on them. I think you can get one of these services for $30 or $40 or something like that, and they'll run a background. You check their financials. You become the landlord almost. You're like,
Okay.
hey, let me make sure that you're making money. Can you service this lease? Can you pay this amount of money? You know, whatever. And you might not, they might not work, they might work out a deal where they don't pay. You know, you might be paying $10,000 a month. They might work, you might have worked out a deal with them to say, hey, look, you pay $7,000 and I'll take the 3,000 just to make it a little bit easier for you. You might work out, seen all kinds of sublet deals. So what you do is you get an attorney and then he writes you up a lease, a sublet lease to give to them, which holds them liable for everything that you've leased them, whether you lease them the entire space or only a portion. They are responsible for that. So if something happens, say it catches on fire, they tear it up, they run out on the lease, you're able to, the landlord is going to still be able to come after you, but you're able to go after them now and say, look, you're responsible for this because you signed a lease and you said that you would be responsible for that. So you could take that to court and give that to them and say, look, it's not on me, it's on them. And so, you know, yeah, the landlord can still technically try to come after you, but you subletted it to them. So you're going to, it basically like you're going like a chain reaction going off into the, going to the other person.
So where does the landlord come in? So at what point do you sit down with the landlord before you sublet and say, listen, this is what I want to do? And do they then sign off on that to say
Yes.
that they agree with this sublet? Okay.
Yeah. They have to agree with it because at the end of the day, it's still their property. But
Okay.
you have to, but this is why it's important to negotiate at the beginning to prep them that it's a possibility that this may
Okay.
happen. And because if you don't, when you come to them with the sublet, you say, hey, look, I found a company that I really want to sublet to. And they're like, you never talked about sublease, and this is your space alone. Don't give it to anybody else. But if you prep them for it and you put it in the lease that you have that option to do so, they legally have to sit down with you and they legally have to say, okay, if it's a good tenant and if they can make the rent happen and they can furnish the rent, they have to give them a shot. They
Okay.
can't just shut it down and say, we don't do that here. They have to legally give you that shot. Now, you may not ever exercise the sublet, but I would definitely try to push for it and try to, you know, see if you can get that done because, I mean, as this year showed, stuff happens.
Anything
So,
can happen.
yeah,
So it's
anything can
good to
happen.
get it in the lease up front, even though you may not use it.
Yeah, even if you may not,
Everybody
and you might tell them, I may not ever use this, but I want to have it in here
as an
and
option.
you know, as an option,
Okay.
option.
All right.
So,
Thank you.
and then what's provisions for renewal and canceling the lease? So I personally always put a renewal in a lease. You may not ever use this renewal. You might say, after my 5 years is up, I'm done with this landlord. I don't want nothing to do with this property. But that renewal gives you an option that if you do like this property and you want to stay, we've already kind of negotiated that you're able to exercise that renewal. So he can't uh and it protects you on two ways. So the first way is that once your lease is coming up at that 5 year mark or 4 year mark, wherever it is, if that landlord sees another tenant or the rents are going up and he's like, hey, you need to leave or you need to pay me more money, we need you, we going to put somebody else in here? Because you see a lot of landlords, they'll threaten with, we'll put somebody else in or we'll kick you out or whatever after your lease is up if you don't want to pay us more money. If you got a renewal in there, it already specifies how much you want to pay. So you'll say this 5 years I'm paying $15 a square foot, but on the renewal 5 years, I only want to pay $15 and a quarter. And if the landlord agrees to that legally by law in Ohio, he has to charge you $15 and a quarter for the next 5 years. Now he might not like it because everybody else is getting $18, but he agreed to it because it helps him to lock in a tenant and lock in revenue for the next 10 years. So they'll sign off on it and he might not like it because 5 years comes, the rent goes up. You know, he might not like it. But with canceling of the lease, you want to put that in there too, because a lot of people overlook this and they don't put it out in their lease. You want to put it out in there because you never know. I got a tenant that's in Roseland that I'm working with, and he didn't put a out in his lease or cancellation in his lease, and now people are breaking into the units inside the strip center. They're breaking into the units. They're stealing TVs. They're doing all kinds of stuff to the units. And when he went to the landlord and said, hey, look, are you going to fix this problem? And they're telling him basically, what problem? We haven't seen anything happen. They're just playing the I don't want to be liable card. And now he's like, well, I want to leave. And they're like, well, you don't have the right to leave. You got to stay here for the next 2 years because you signed on for 2 years. And he's like, well, I want to check my lease. And then the lease, it has a renewal in it, but it doesn't have a cancellation. And I didn't negotiate that, but he did it on his own. And now he's like, Ed, what can I do? And I'm like, well, you could talk to my lawyer, my attorney friend. And he told him, hey, look, if people are breaking in, it gives you they don't really have a leg to stand on if they're not going to protect the property. If you decide to leave, if they try to take it to court, most judges will throw it out. But it's the option, it's the fact that that he didn't put it in there, and now he has to deal with all of the things that are happening to that property, and he can't do anything about it. Okay, so choosing the best location for your business, to me, is just pretty simple. Like, 4 questions, about fitting your business's need. Will this location house your employees comfortably? That's huge. You want to make sure that not only going to house your employees that you may have today, you may only have 2 employees today, but is it going to house the employees for the future? If you got growth happen. Does all the business equipment fit inside the location? This might sound silly, but people do this. They'll go in and they'll see a space and they'll say, okay, that's enough space for me to have an office, Jan to have an office, Michael to have an office, and then we got a reception area for people to come in, and then I got this room for me to put my printer and stuff in, and my equipment to do this. But then they might need down the line, as the business grows, they may need a huge piece of equipment that they didn't that they knew they may need in the future, but they just didn't accommodate it when they came and got the space. And now they're like, we're outgrowing the space. We can't grow our business because we can't get the equipment. And then they end up having at least a second location just specifically for the equipment and the people who run the equipment. And that might work for you, but if you can get it all in one walk, that's what I would do. I would try to get it all in one place.
Ed, I'm sorry, but I just saw Star Rivers' question she had. She said, is 5 years the minimum or average time to lease commercial property?
No. I've done a ton of leases at 1 year. But what I will say is, as 1 year is kind of the minimum for most commercial spaces, if you want the landlord to do work for you, or if you want them to give you TI money, they're going to ask for a longer period of a lease. And that longer period usually is the minimum is 3 years. And then, 5 years. Minimum is usually 3 to 5 years. And then it goes up from there if you want them to give you money to help you build it out. But no, yeah, you can. I've seen leases 6 months. If the landlord really wants a tenant and they really like you, they'll they want to fill their space, they'll sign a lease. And I've heard about month to month. I've never done a month to month, but some places out here that'll do a month to month too. It's rare, very rare. I want to set you up for that. It's very rare. Usually the minimum is a year though.
Would a month to month be more like for a pop-up? Like if you just wanted to test your product or test what you were doing, like some kind of like prototype, where you would just have like a 30-day pop-up to see what kind of business or you were able to generate, and then use that to help improve whatever product or services you were offering?
Yeah, you see that a lot, especially you see it downtown in like OTR a lot, where people will pop up, and you see Mortar does it a lot with their people with that extra space that they have. They'll let people open up, sell their t-shirts or clothing or whatever they're selling for 30 days just to see if it's a market for it. But you see it a lot in small office buildings, where you got a space where it's pretty much enough space for maybe 1 or 2 people. They'll do a lot of month to month there because a lot of those smaller companies that go in there, they're not looking to do long leases. they're only looking to do a year or a month, or 6 months, 3 months. So they'll charge them a higher rate to be there. But excuse me, it works for them. So yeah, you see it a lot of office buildings and little small pop-up storefronts.
Okay, thank you.
No problem. Um, can your business grow and expand? That's why I was saying I always aim for, if we can get a deal on the rent, I'll always aim for you getting a little bit of extra space. It might not be a lot. You might not get 1,000 extra square feet, but if we can squeeze out 500 extra square feet, 200 square feet, it makes a difference, because now you're not hindering your growth, because we're all in business to grow. We all want to get bigger. We all want to do more business. And you might not necessarily want to get bigger as far as being the biggest company in your industry, but you want to pick up some extra space just in case you need to. You get featured on a website, or you're selling stuff online, and one of these Instagram or social media, one of these platforms shares your product, and now all these people are ordering it. But if you can't store that product and be waiting for that, be able to furnish those orders, then you can't meet that growth. So I always tell people to get a little bit of extra space, not a ton, but just a little bit, to be able to anticipate that. Does the location meet the traffic and parking needs? Some businesses don't need parking. I mean, don't need traffic and drive by and walk up traffic. They don't need it. But some people do. So you need to make sure that you choose the right location for you. If you need to be on Main Street, front and center, to get that walk up traffic, or to get that sign seen on the front, you need to take that in accountability. But if you don't need to, you're a manufacturer, and you could take a warehouse space in the back of a parking lot, because what you're doing is pretty much making the stuff, and then people come in trucks and pick it up and take it out. You can get a better lease rate, because you don't need to be up front and center. You can be off in the back somewhere doing your business. So it's just about the needs for each individual business. So here, you may know this, but I know it's maybe a couple of people who don't know this, uh, how to calculate the square footage for a space, because one thing that gives you validity when you call these brokers, or if you talk to a landlord, is that they're going to talk this way. They're going to say, it's $13 a square foot. It's this, it's that. They're going to talk in terms of it's modified gross, or it's triple net. They're going to talk in terms of commercial real estate. And the first thing that's going to tip them off that you don't really know about commercial real estate, they shouldn't be this way, but they are. They're trying to say that, hey, this person may not be a good person to work with, because they don't, we don't want to take a chance on. They don't even know what they're looking for. But if you can come to the table and talk in the terms that they talk, then you can get further in the conversation. So I would say, I just kind of use this as an example. And if you want to just kind of add this to your mental notes or write it down, just kind of, if you have 15,000 square feet and the broker says it's $13 modified gross. So how do you determine the monthly rent? So you take that 15,000 square feet, you times it by the $13 a square foot that they're asking for, and then you get 190,000 for the year. Then to get your monthly rate, you divide that by the 12 months of the year, and then that's your monthly payment. There is the 16,250, and you use that for any scale, just to do quick math to know exactly how much you're going to be paying. That way, you won't go into a space that they want $5,000 for, and you were only anticipating paying $2,000. That way, you can just know how to X off properties real quick by doing the quick math that they're giving you. Some of the different charges, like I was talking about earlier, triple net, which is net, N properties, and then CAM properties, which means common area maintenance. You see this in properties that are they could be retail or they could be office space, but you see it a lot in retail, where the common area maintenance is really pretty much them covering supplying products for the bathroom, using janitorial to clean the main areas and vacuum the carpets and keep the main areas clean, snow removal, landscaping, all those different type of things like that. That's what common area maintenance is, and they charge you for that. So on top of your $13 a square foot for the common area maintenance, your portion of that may be $3, $3 extra. So you might go from $13 a square foot up to $16 a square foot because what I just did there. Well, you go up to $16 a square foot because they're trying to accommodate this, and they're breaking it out between all the tenants. So they're spacing it out between all the tenants, and they're like, hey, your portion of that is $3 extra. So accommodate for that in your rent, and then you'll pay that each month. Triple net means, with triple net is when you're paying your portion of the net cost of the property tax, insurance, and etc. These costs are additional to the monthly rent. This is just to make it simple. Walgreens usually don't own the building that they're in. They lease that building for X amount of years. So they'll go to a developer. They'll say, hey, we want to open up a Walgreens in downtown Cincinnati. The developer will get the land and build it, and then they'll put them on a triple net lease, which means that Walgreens pays for everything in the building as if it was their building. But the only reason that they do this is because if they ever have to leave that area, or if the area goes down, or if it's not working for them anymore, they're able to get out and they don't have this property sitting there. So that's kind of the benefit of people taking on triple net leases. But you're starting to see it more in just regular retail environments. So you might have 1,000 square feet alongside 5 other people who have 1,000 square feet, and you're all on triple net leases because the landlord is trying to pass out that property taxes and insurance amongst everybody. And I would say it's unfair, but they're starting to do it everywhere. They've been doing it everywhere. And that's kind of what you see in most of these spaces. So when you're talking to a broker, or if you're talking to a landlord and they're like, oh yeah, it's $13 a square foot, make sure that you ask them, hey, is there a CAM charge, or if there's a triple net charge additionally to that? And most of the time they'll pause and then they'll say, oh yeah, it's about $3, or this about $8. They'll throw it out there real fast because they know that runs a lot of people off, that they have to pay that additional monies towards that.
Ed,
Huh?
hi, I have another question. It's
Yeah.
Deborah. So, you're talking a lot about a broker, and having a broker seems to be extremely important through this process, because I don't know what average person knows all of this. So how do you go about selecting a broker? How do you interview a broker? What type of things should you be looking for? Because you said that some brokers are a little not as upfront and honest as others. So what is it that you need to look for when you are trying to find a broker?
So what I tell people is that you want to find somebody who, one, will be willing to work with you and what you're trying to do, because a lot of brokers, and I'll be honest here, I'm like one of 3 or 4 African American brokers in Cincinnati. There's not a lot of us here on the commercial side. There's a lot of us on the residential side, but not on the commercial. So what I realize is that even with those 3 other brokers that I know of, they really don't service this like local entrepreneurs as much. They pretty much go after the big P&Gs and they go after stuff like that. So there's not a ton of like the other brokers that are out there. They're not I don't want to say that they don't work, because they work with us, but they're a little bit more picky on who they work with. They're like, I don't know, I don't really understand that business. I don't understand hair salon in Roseline, or I don't understand hair salon in Avondale. I don't understand that. So they won't answer the phone, or they won't give you a call back about stuff unless you're looking to lease one of their properties. So what I would do is look on, so I mean, everybody's on social media. just kind of look up brokers or look up, commercial real estate brokers and see who's active, and you can see what kind of, who they service, and if it fits you, you might meet a guy that only specifies in retail in certain areas, and that's the area you want to be in. Like one guy that I know that's a good friend of mine is Josh Rothstein. He specializes in retail in Pleasant Ridge. So if you want to be in Pleasant Ridge and you want to open up something, uh, Josh will be your guy. I can help you, but Josh knows that area back and forth through and through, and he's able to help you get a space out there because he knows everything before it comes on the market. So I would say just kind of look around. You could type it on Google commercial real estate shop, but it really goes broker by broker, who they deal with and what they like to work with.
And I have one other question, and Karen
Yeah,
has a question. Karen wants to know if you're accepting new clients.
yeah. I'm humbly, yes. I'm always accepting new clients.
And then my
Yeah,
question to you is, would it be better for someone starting out in this field, like buying commercial property, to find a broker who is willing to work with someone who is new in the industry and willing to educate them along the process, versus someone who like may not have the time? They have the skill sets, they have the knowledge, the broker does, but they don't want to take the time in working with someone who is new in the industry and sort of bringing them along.
yeah. You definitely want to, if and it doesn't have to be with me, it could be with anybody. You want to try to find you a broker that you can build a relationship with, and that's willing to work with you at your level. Because even though I've done all kinds of deals, I'm willing to work with someone who's this is their first time ever getting out there. And I try to explain it to them as best as I give you the tools, and I tell you, hey, look, before we even look for property or before I even start this process with you, I'll show you. I got a checklist at the end that I give to people. But I give them a checklist and say, hey, look, once you're ready and you're done with these things, you think you have everything you need, then let's take it to the next level. Like, because a lot of people, I get maybe 20 calls a week of people just saying, hey, look, I really want to open a daycare, but I've never opened one. I don't even know the first steps to getting a commercial space. And I asked them, hey, are you currently running a daycare right now? And they're like, no, but I know I can do one. And it's like, well, the first step is not me. The first step is finding out how to open up a daycare and all your licenses and all that stuff, and making sure you're solid on that standpoint before you come to me with the property. Because the I get a lot of people that get frustrated because they're like, I want to just look at property, and it's like, that's fine, we can do that, but once we get out here and you're gonna fall in love with one of these properties. You're gonna say that this property is for me, this property is for my business. The humbling part is that the landlord and that the other broker on the other side of the table is going to ask you all the questions that I'm asking you now, and then they're not gonna want to work with you. They're just going to say you are not going to be a good fit for this property, and they're never going to accept the call again. They're just going to be like, Ed, I appreciate you bringing them, but it just doesn't work. Like, they're not ready. They're not ready to do this. So it's best to have all your ducks in a row before we go out and look at property, because these guys, I mean, at the end of the day, it's business. This is how they're feeding their family. So they're quick to evaluate somebody and say if they're going to work with you or not.
Okay, thank you.
No problem. Okay. So I'll go into the different types of lease and purchase types. So commercial real estate pretty much primarily on the lease side works with four different types. Full service, which is, I love full service. Full service is everything. Usually pay a higher rent rate for full service, but full service is pretty much the landlord's taking care of your internet, telephone, your electric. All of the stuff is inside your monthly rent payment, so you don't have to pay for anything outside your rent except for what comes with your business. And you see that a lot in office buildings, not so much in retail, but in office buildings, you'll see a lot of full service leases. Modified gross is a modification of this full service. So usually with modified gross, they're giving you either or. They're either giving you electric, and they're giving you water, or they're giving you water and they're giving you something else. They're not giving you everything inside of it. Most of the time, they're giving you water and electric or something like that. But they modify where you pay a couple bills and the landlord pays a couple bills. That way, it's like a 50-50 type of thing. CAM is what I explained to you earlier. CAM leases are the ones where the landscape and snow removal is charged on top of your monthly rent. And then triple net is what also where your property taxes, insurance, and all that stuff is an additional charge on top of your rent. Now, purchase methods, because I know everybody might not be ready to purchase, but down the line you might be wanting to purchase. So traditional finance is what you see when you purchase a house. You go to the bank, you say, hey, bank, I'm looking to buy this property. The only difference between a house and a commercial property is two things. In a residential environment, you might be able to get a program where you put down 3%, 5%, 7%, and then you're able to get the property. In commercial, there are no programs like that. They're only is usually 20 to 30% down, and that's any bank, 20 to 30% down, and then you're able to finance out the rest of it. Most of the time, people try to shoot for the 20%. It depends on how your credit and all that stuff works out, but most of the time, you're probably between 25 and 30% is what I usually see from banks when they want to finance a commercial space. Cash is king. Most environments, especially in a retail, not a retail, but in a residential, but in commercial, cash sometimes is not. These landlords, they want to, even if you have the money to buy the property, they want to know who you are, how you're gonna do it, what you're gonna do with the property. They're a little bit more nosy on the commercial side on what you're doing with the property, more or less than a residential. Residential, they're like, you got the money, let's do it. In the commercial, they're like, how you gonna do it? Because it usually takes a longer period of time to close a commercial property because all the due diligence that you have to do in the residential side, we had all kinds of home discrimination and redlining and all that stuff. So they've put a lot of catch places in to stop landlords from taking advantage of us. But in commercial, they're like, if you're an investor and you're investing in commercial, you need to do your own due diligence. That's why I stress, get you a professional that knows what they're doing, because you need to make sure that you're getting inspections, you're getting surveys, you're getting all that stuff you need to buy this property. Because if you don't and you buy the property, there's no recourse. You can't go back and say you sold me a bad building, or you lied to me and said the plumbing was working and it's not. They don't care. Like, the legal system is like, you are an investor, you should have did your due diligence. So it's not a lot of recourse to get back on a commercial property. Seller finance, you see this a lot. I like to call them land contracts. So you might find a place that's perfect for your daycare. I actually just did one of these for a daycare over in Cheviot. She wanted the building. She didn't want to lease it. Well, she wanted to lease it. The landlord said he didn't want to lease it anymore. He wanted to sell it, but financially and credit wise, she wasn't ready to do it. She couldn't get a loan from the bank. So the landlord said, hey, look, you pay me X amount of dollars for 5 years. And then at the end of the 5th year, you get a loan from the bank and pay the rest of whatever the balance is off. And I'll carry that finance for the 5 years. And then on the 5th year, you pay me my lump sum, and then I'll go away and it's your property. So you get that a lot. This is a creative way, and a lot of people overlook this. But when you see some of your some people on Facebook and Instagram, and they're popping up with properties all over the place, and you like, I know them. They ain't got the type of money to be buying all these properties like that. A lot of time they're using this. They're doing a lot of land contracts and seller finance. Lease to own. You get you got the lease to own. It's similar to a land contract, but it's not. Uh, Most of the time, you'll be in there and you're leasing this property for 5, 10 years or something, and you've seen it a lot. You'll see it a lot, especially in an area like West End, uh, right before FC decided to go down there. A lot of those buildings had been there for years and had tenants in them for years. The landlord, at some point, majority of them, when you hear those stories on the news or you talk to those people, they're like, man, the landlord came to me 3 years ago and asked me if I wanted to buy this property. I should have bought it. That's a lease to own. They'll come to you and be like, I want out of this building. I done owned it for 30 years. I really don't want it anymore. You've been leasing it from me. Let's work out a plan where you pretty much take this over the next couple of years. We'll redo the rent for you to take the building over. Okay, so just a couple key negotiating tips. Number one, hire a broker and an attorney. I know that it's extra money. I know you don't want to pay that extra money to the attorney because, like I said, the broker usually charges his to the landlord. But this is important because the landlord at some point is going to give you a lease. And I don't care how smart Ed is or how much Ed think he knows about commercial real estate, but those attorneys know how to use that legal jargon in a way that that can get past anybody. So if it's not another attorney that can identify that and stop it, like we ran into this a lot when we were negotiating Davis Cookies. They had we were working with the Port Authority to do this, and the Port Authority's attorney, wow, they were so slick of the way they were throwing lines in, and if I wouldn't have advised them to get that attorney and they wouldn't have listened to me, that deal would have went so left. But they did. They got an attorney, and the attorney was like, "This is wrong. This is wrong. This is wrong." And we were able to get them a good lease. So attorneys are very much important, just like the broker. Uh, Ask if they do want to put you on a CAM charge lease. Ask them for the breakdown. If I'm going to be paying for it, I want to know how much is the breakdown, or what is the breakdown, and how much you paying, and how is this dispersed amongst everybody. Don't just go in blindly because he told you to pay $3 extra and you just do it. Don't do that. Ask them for a breakdown, because if you're paying for it, they should be able to give you a breakdown of it. HVAC protection and service maintenance log. Ask them about this. Like I said, this is huge. HVAC is huge because of the cost, and you want to see if they tell you, even if you come to a cap and say, look, I'll pay for anything under $1,000, anything over 1,000 is you. You still want to see the service log just to make sure that they've been actually keeping up on this thing and not just telling you that they are and not really doing it. So, tenant allowance, always ask for a tenant allowance. It just makes good business sense to ask for that extra money. Never overpay on market rate. And that's why I was saying, get you a broker, or either call around to the different available spaces around where you want to be and ask them how much they're charging, and you can get an idea. And then plumbing and electrical, like I was saying earlier, that's huge. Plumbing and electrical, you want to make sure that's along in the same bucket as HVAC. And then purchasing, you want to hire a broker and attorney. I want to say that again. And then you want to make sure that you're getting the best price. And price is relative, because it's like, what is somebody willing to pay? But it's also, you want to make sure that you work with somebody who can pull up comps, which is comparables in the area. And they might not be exactly to what your property is, but it'll give you an idea. If some property sold down the street for 400,000 and the property up the street sold for 500, and your property is similar to them too, and your landlord is telling you got to pay 800,000, you're gonna want to know why. Why am I paying an extra 400,000 for a property that's comparable to these two properties? Why am I paying that extra money? And let them try to explain it to you, and then try to figure out a way that you can work the price. Environmental surveys. This is all for purchasing. Environmental surveys. These are huge because you might go into a property and you go to purchase it and you don't know what was on that property before. Like, you'll see a lot of properties, they'll just be vacant lots because they couldn't pass the environmental. They're digging down there, and may used to be a gas station, dry cleaners, those things. I just realized, I just found out recently, dry cleaners put out more chemicals than some gas stations into the ground because of the chemicals that they use. So that's why you see dry cleaners stay dry cleaners forever, because they can't tear them down and reuse the land, because the land is so toxic now. Uh, you want to do environmental studies, they have companies that do it, and then you do that. It takes them about 2 weeks to get you that survey back. Property taxes, you want to make sure that you look all this stuff up, property taxes, and make sure that you see exactly what's happening. Make sure that the property is not behind, all that different stuff, because you don't want to take on a property and then incur all their stuff that they've been building up over the years. Current tenant leases, if you buy a building, I always recommend, if you're not buying a building for like a daycare or a church that's a one use building, I always try to, it's pretty much a lot of buildings out there that's in the same price range, and you can get 2 or 3 spaces in that property. So if you're going to buy a retail space with one to house your business, try to find another retail space for sale in the same price bracket with 3 spaces. That way you could take one and you could lease out the other 2 to generate some revenue to cover the mortgage and all that other stuff, and cover. I mean, you might be able to cover your rent inside of there. That way, your business is operating rent free, and you just focus on your business. Roofs are important. Just like in residential, you want to ask, hey, how long has it been since you changed that roof? And if not, if you haven't changed it soon, are you willing to change it to sell it? And if they're not willing to change it, give me a deduction in the price to be able to go out and purchase a new roof and put on. And then any service and maintenance records for the property period is important. Okay, so this is the list I was telling you about. This is what I send out to people when they first reach out to me and say, hey, Ed, I'm looking to take on property or looking to lease property. So it's, it's just kind of 5 simple questions. Do you have a business plan? Have you created a concept or lookbook? This one is optional. You don't have to do the concept and lookbook, but a lot of people do if they're going to go to a bank and ask for money, or go to a lender and ask for money. You want to give them an idea of what you have or what you're looking to bring to the area. And a lot of these people, they're analytical people, so they don't really see like an artist, they can't really put it together in their mind. So if you can give them a lookbook and say, hey, look, this is what I'm trying to do, and you flip through that, and then they can give them a better idea. Do you
So,
have 2 years of business tax?
Ed,
Yeah, absolutely.
so a lookbook is, like you said, like architectural plans or something, or design.
Yeah. So it's a
Okay.
little bit of both. So it's like it's not really architectural designs. It's let's see. Do you know like those vision boards? It's kind of like a
Okay, I
vision
got it.
board. Yeah,
Mm-hmm.
so you put together that book and you just say, hey, look, this isn't my kitchen, but my kitchen will look similar to this one. And
Okay.
then, you just flip through there and get you some concepts and create a nice little lookbook for the people that you're looking to get investors or loans from. Can put an idea on what, put a pin on what you're trying to do. Uh, this one is huge. Do you have 2 years of business or personal tax returns? I can't stress how huge this one is, because every single landlord or broker at some point in the conversation are going to ask for your financials. They're going to ask for what you've done in the past. And if you haven't ran a business, that's fine. But you got to show them your personal tax returns to show that you are generating revenue.
And so, Ed, are you also having to show your financial projections?
Yeah,
Because I know
yeah,
I've worked with a lot of business owners, small business owners, where they don't have income statement, cash flow,
yeah,
balance sheet, or they
yeah.
think their bank statement is their cash flow statement, or so that's what they need, those 3 financial statements.
Yep. You're absolutely 100% right. That's what it is that they want to see a tax returns, but they also, like I said, with Davis Cookies, we had to build out. We worked with Score Mentors, and Score got with Davis Cookies, and I mean they built them out these projections, and they added in how much the equipment was going to cost, all that stuff. They added into this one big plan, and they were able to get the landlord on board with it and get the landlord to allocate TI monies just off of that projections. But you do need projections and tax returns to make anybody comfortable with leasing you their space. Proof of funds and personal financial sheet is kind of tied in with this, but they're going to ask you, what kind of skin in the game do you have? What kind of money do you have to put up? And if you say, I don't have anything, I just pretty much got them. I know I can pay the rent. They're gonna second guess it a little bit. So if I were you, I would try to, whether that's get a loan or whether that's you just saving money, I would try to save up a nice amount of money, because you want to be able to show them and say, hey, look, I have money to be able to, I know you're gonna give me 30,000 to build it out, but to cover the other 30,000, I have enough money to be able to do that, or I pulled out a loan to be able to do that. You want to show them that you have money or skin in the game, as they call it.
And you can also do bootstrapping, right? Like if you have
Yeah,
friends or relatives that want to invest in you or your dream or your business, you can also utilize them to
yeah,
get
absolutely.
finance.
I'm gonna give you a good place to do some bootstrapping, and we did this with Davis Cookie. It's called Kiva Loans, so it's KIVA Loans. And what that system is it's and I'll give you the quick overview of it. It's pretty much, Kiva Loan said they'll give you an X amount of dollars. Hey, you go to them and you say, give me $10,000. They'll say, okay, we'll give you 10, but we need a portion of that raised from your own bootstrapping, like Ms. Deborah said. So you need to go out to your community and your friends, your family, send them the link and say, will you donate to me raising money for my storefront? And this just gives Kiva a little bit of insurance that you're going to be able to raise the money and that you'll be a good loan. And yeah, so you'll go out and you'll send that link out to everybody, and people donate $2, $5, $70, $100. And then I think it says over a 24-month period, as you pay the loan off to Kiva sends the money back to everybody that you bootstrap from. So it's a good way to work it. It's a lot of other programs too, but that's a good one if you want to just get going quick and kind of check it out. So KIVA Loans, Kiva Loans. Okay, and this is my contact info. These are some of the companies that I've worked with, but this is a good number to reach me at, is the 513-549-0440. And then this is my email address. And then yeah, if you can find me on all the social sites as just Ed Mathis. And then on Instagram it's Ed Mathis, Mr. CRE, and then which is commercial real estate. But you can find me on any of them, just Ed Mathis. You look for this picture, and that's me. I'm there, and I'm always promoting my clients. I'm always showing that people, sharing that, hey, this person signed here and go support them. I'm always sharing them. So that's a little extra kick you get from me. It's just me blast your business out after we do business together. I blast your business. I'll try to help you get more business. And then I'll leave this up for a second, but it's just questions after that. But I'll leave. Let's see if I can go back and leave this up for you can take the info down. But yeah, if anybody has any questions or anything, just let me know, and go from there.
All right, so are there any questions for Ed right now? Anything you need clarification on or that he can assist you with? We do have a little bit of time. We have 7 minutes before we end this webinar today. So if there are any questions, I don't have any more questions for you, Ed. So if there aren't any questions, please reach out to Ed Mathis, Vice President, Republic Commercial Real Estate. Oh, there is a question. Oh,
okay.
That was a great opening. Mary Jane Good, that was a great opening. So you kicked off our financial webinar series, Ed. So I just want you to know that. So Mary Jane Good is the Executive Director of SCORE Cincinnati.
Awesome,
so
yeah.
Giving you some feedback saying it was a great opening for our series that we're having. So, and to segue out from that, I just want to say that our next webinar will be April 20th, and we will be discussing SWOT analysis and business feasibility analysis. So that's really important. Please make sure that you attend those webinars. Information has already gone out, and we'll continue to pump the information out there. We have webinars that kicked off from April 13th today, and we will have webinars until June 29th. So please make sure that you participate in those as well. So Ed, again, I want to thank you. Ed, you have something to say?
Yeah, I want to just give two plugs. First, I want to plug the SCORE mentors. They are huge because when I was working with Davis Cookies, we were going back and forth with the Port Authority, and I've since then created a relationship with the Port Authority. But before, it was hard going back and forth with them trying to figure it out. And when SCORE stepped in to help Christina and Miles build their plan, I was blown away how detailed. And I forget the lady that they work with, but man, she was amazing. And she helped them put that plan together, and it really sold the port on giving us that space. And then the second plug is the African American Chamber. You have been amazing, all the work you do in the community. And these programs, I mean, every time I just seen Eric Kearney down there. I'm a member at Rotary, and I seen him there. And I told him I'm always trying to figure out a way to get into these programs because there's so much intel and invites that comes here. And I'm like, oh, man, this is amazing. So you two are amazing. The two programs are great, and our organizations are great. And I appreciate everything that you do, not just for me, but for everybody.
And Ed, there's nothing else for me to say after all that. So thank you again. Thank you, Mary Jane Good, for working with me and working with the African American Chamber. Thank you to all the participants. Please make sure you tune in for our upcoming webinars, and enjoy your day. Have a safe and healthy week. Take care, everyone.